right, I think we are ready to get started here. Welcome everybody, and thank you for joining us today for our virtual panel discussion, Wage and Hour Considerations for Texas Employers in the COVID-19 Era. The panel will be moderated by Seyfarth's Tim Watson, and our panelists include Seyfarth's Steve Chardonofsky and John Phillips. We're also joined by Estrella McKinney, who is a former senior wage and hour investigator for the Department of Labor. Before we get started, just a quick few housekeeping items. Our panelists will go through the materials and use the remaining time at the end to answer questions that you may have on the topic. In order to ask a question, you can use the Q&A chat box on the right panel of your WebEx screen, and we will try to get through as many of your questions as possible, time allowing. To touch on the legal disclaimer within this PowerPoint, this presentation has been prepared for informational purposes only, and the material discussed during this webinar should not be construed as legal advice. With that said, I will turn it over to John Phillips to get things started.
Thanks, everyone, and good morning. Go ahead, Tim.
Yes. Well, thank you, everyone. Good afternoon. It looks like my computer just disconnected, so I don't know if you guys can see me, but I guess you can still hear me. With the coronavirus our challenges with the virus and all of the implications for wage and hour cases in the workforce just seem to be continuing on and on. So we thought we would go over some of the more prominent, more common issues and get input from everybody about the best ways to anticipate it and try to avoid the problems that we at least can control and avoid. We're going to start off by talking about the idea of folks working off the clock. My experience is if you have hourly employees who are working remotely from home or from wherever, under the best of circumstances, when you have clear policies, it's a challenge because the people they're working remotely, and at the end of the day, I think ultimately you have to rely on your employees to follow the policy and report their time accurately. But with the pandemic and what's going on with the pandemic, these problems have just been magnified and evolved and involve all kinds of separate and additional and novel issues. John, do you want to discuss? I'm sorry, Steve. Steve, do you want to discuss some high points on working off the clock issues?
Yeah, thanks, Tim. I do have some thoughts. There's been reports that at least as of April of this year, up to 50% of the adult workforce in the country were working from home, which is a staggering statistic. And although that number has likely decreased in recent weeks, it's likely that many non-exempt employees are going to continue to work from home, and that might become the new normal. And obviously, the risk there is that your non-exempt employees who are working from home may be working off the clock. They may be working before and after their scheduled shifts. They may be working during their meal breaks. They may be working at home, in their pajamas at nighttime or even on the weekends. And, we have, clients and managers and executives calling us and saying, well, how can we be liable for this extra work time if the employees are at home and we don't really know about it? But the rules under the FLSA and similar rules under state law are really not that simple. If the company has constructive knowledge or should have known that the work was being done off the clock, it's likely that you might be on the hook for that time. So if employees are logging on to their work computers, sending and looking at emails or receiving and making phone calls, right, to managers or coworkers or doing any other work that would put the company on notice, there could very well be liability for those off-the-clock hours. So, that's a definitive risk when you have so many employees working from home and they're not really accustomed to doing that. John and I talked a little bit about some ways to mitigate that risk. John, maybe you have some thoughts on that.
Yeah, absolutely. Thanks, Steve. Like Steve said, I think, there's obviously always that problem when you have employees at home and you don't really have knowledge or that much control over what they're doing. But there are ways that companies can there are things that companies can do to help limit their potential exposure for off the clock type claims. And I think that number one, it starts with company policy. I think it's important, the more and more people you have at home, or even now after a couple of months, is to reiterate to everyone what the company's policy is. Number one, that no work should be performed off the clock, and that includes work from employees working at home. And then another good step that companies can take is to ask all employees to self-report the time that they are working. So combine that with the expectation and the policy that no off-the-clock work will be performed. All employees, are required to tell the company, the hours that they're actually working, and also, to let employees know as part of that they should be segmenting out, if they have a significant break or something during the day, if they're taking a lunch break, things like that should be accounted for in their time. So that the company has an accurate description of the start and the end time, the start and the end time for lunch breaks and things like that. These updated policy reminders going out to employees, all of that, is important documentation that should be recorded by the company, kept in the regular course, so that if there does, if an off-the-clock claim does come up later, the company will be able to pull those records and show that they were updating their policy, making sure everybody knew about it, was aware of it, and that it was being actively monitored. And then
John,
I was going to jump in. And I've defended so many off-the-clock claims, and what always gets you in trouble in every case is you have, an email from a supervisor or a manager who is complaining about somebody working overtime. And that opens the door for the employee to say, we were told on the one hand to record all of our time. That's the policy. But then we're told by the managers that, you're not authorized to work overtime, and I don't want to see any overtime. And the only way I can get the job done is if I work overtime. So I think, to me, that is really where the rubber meets the road. That's the tension point. And I think the most important thing is to train the managers to manage that situation appropriately. If someone's working overtime, they have to record it. If someone's abusing it and they're, sort of inexplicably working excessive amounts of overtime, then you have to manage it. But you have to be very careful about how you manage it to avoid that that claim coming.
I think that's right.
Australia, I saw you nodding your head. Have you investigated a lot of these, or with the DOL?
Yes, and the employer's position was always, I didn't authorize that. At the end of the day, it doesn't matter. If the employee did the work, whether it was approved or not approved, it must be paid.
Right. And that's basic. We should all know that.
Yeah,
Go ahead,
I think
John.
obviously, one phone call in the evening or one email, that's not going to be compensable. But I agree with you, Tim. If the supervisors and the managers are seeing employees, sending emails, doing work on the phone before and after their shifts or during the meal break, that's where the training comes in, and that's where they need to sort of put the brakes on and make sure that people are not working off the clock, reiterate that policy, and make sure to go back and to pay them for that time, which is also something that's not done enough.
Okay, I agree with you. Let's turn to expense reimbursement issues. This is another issue where it's just kind of a quicksand the more you dig into it when you start considering the various different state laws especially. But again, with the pandemic and people working from home, we're seeing different sorts of expenses that previously companies haven't anticipated. John, do you want to talk a little bit about expense reimbursement policy and sort of best practices to how to handle that?
Absolutely. And I think the good news for a lot of clients is that, Texas has less onerous rules than, California, Illinois, some of the other states where, this really can catch employers up and become, quite a bit of potential exposure, including potential class cases in those states. But generally the issue comes up like you said, Tim, a lot of companies' expense reimbursement policies are really geared towards travel. They're not really geared towards personal equipment, computers, internet, cell phones. Cell phones too. There's more policies geared towards cell phones now. But those are services that employees are using quite a bit more now that they've been working from home for a couple of months. And we do expect that there'll be an increase in reimbursement type cases. Especially like I mentioned, in states like California, Illinois, some of the other states that have onerous reimbursement, business expense reimbursement requirements under state law. So really,
yeah, I would just reiterate that. Or go ahead.
Oh, I was just going to say, in those states, and potentially even in states where it's not necessarily required. One best practice is to set out think about what employees would be using at home and set out a flat rate for what, we might estimate those expenses to be per month, and then implement a policy that reimburses those expenses. And that's particularly important, like I said, in states outside of Texas, where this actually, could lead to potential liability under state law. Go.
Maybe a DoorDash budget?
I don't know if I'd go that
far. Yeah. Well, I was going to say, I would reiterate the state laws. I've encountered, again, recently, and this is in Pennsylvania, just the most Byzantine, crazy set of rules up there for, well, at least for litigating whether or not an expense is deductible. Under the federal law, there really is no law other than you need to be careful to make sure that any expense deductions don't result in someone earning less than the minimum wage for any hour worked. So this is really a state law specific issue, at least legally, and it is worth taking the time to look at the state law where your folks are working to make sure you're in compliance, and they can be bizarre. John, would you have anything else on expense reimbursement?
No, I think that covers everything. I think really, it's knowing where your company, where you have employees working, what those states' rules are, and then because it like you said, it's not all that likely under the FLSA that just business expenses for at-home employees would lower their rate below the minimum wage if you took those into consideration. So it's less of a problem in Texas, but it can be a potentially very large problem in states with onerous state laws and penalties associated with it.
Great, thanks. I've seen so many emails talking about temperature checks and whether that's compensable. I mean, when I've gone into a store, Steve, I know you're talking about this next. When I go into some places and they have a little thing, they put it to your forehead, it takes literally like a second or a second and a half. Why is there so much email traffic over temperature checks when I just don't, how can that be? Are there different kinds of temperature checks that I'm not aware of?
Yeah, I think it's not necessarily so much the temperature checks itself, because you're right. Even if you use a handheld, thermometer, one of those infrared thermometers, it takes a couple of seconds. And I think a lot of it is just, the waiting time when employees are heading into the office or going into the work facility, and they have to social distance, and everybody's trying to get in at the same time for the start of their shifts. They might be waiting there for 5,
right.
10, 15 minutes. And whether, and it's not just temperature checks, right? There's some employers, depending on the facility or the work, the industry, they may require employees to don or doff certain additional protective. May ask the employees at the same time in line to complete safety questionnaires or certifications. They might ask their employees to wash their hands, use hand sanitizer. So, it depends. It could, the time could potentially add up. The question is, is any of this really compensable for non-exempt employees? I've gone out to eat a number of times. I've had my temperature taken, and I haven't asked the restaurant to pay me for that time. But, maybe they might have to pay their employees for that time.
Maybe you should.
There's really no blanket rule in this context. It's really a sliding scale. The more onerous and time-consuming the safety protocols are, the more likely it is that the FLSA or the DOL is going to find that time is compensable. And likewise, the more specific the safety rules are to your particular business or industry, the more likely it is that time is going to be compensable. So, for example, if the employees are just donning or doffing a simple face mask or a face covering that they can use outside of the workplace, and that's required for the general population, that's really not going to be compensable. It's going to be de minimis. But, if you are asking the employees to put on more onerous PPE that's required for the particular industry, in healthcare, for example, or in other workplace settings, that might be compensable. As to the temperature checks themselves, we don't really have much guidance. In 2014, the Supreme Court came out with that integrity staffing case that held that, post-shift security bag checks for warehouse workers were not compensable. So, under that case anyway, under federal law, there's a good argument that temperature checks and the time waiting for those checks are not compensable. But the issue's not really clear. And on top of that, there have been, identical post-shift security bag checks under state law in California, New Mexico, and other states that have gone exactly the other way. So you really want to check on state law when you're looking at these issues. And I think, given the uncertainty, really the most conservative approach is simply to pay your non-exempt employees a set number of minutes, 5 minutes, 10 minutes for these pre and post shift activities. It's really a small upfront cost, and it will avoid much more expensive, litigation in the future. And I think on top of that, if you're paying for employees for that time, it will incentivize them to better comply with the safety protocols. I'm curious, Estrella, do you have a sense? I know you left the Department of Labor before the COVID pandemic began, but do you have a sense of how the DOL might approach some of these issues?
Everything that you have said so far, I kept going like that, because that's essentially what I would have done as an investigator. Our guy back then, obviously we don't know the guidance right now, but I just don't see any other way. If you are in a industry where, like an example, in a restaurant, an employee having to do something simple, it takes 2 minutes, we really wouldn't care. If you're working in a hospital and the nurses have to be there to do the full everything, we will absolutely try to get that money for that employee. So it really comes down to everything that you said. I agree.
We've got a specific question from somebody asking, and I think this is an interesting question. One of our participants has asked, or attendees has asked, whether, so let's say you have, you're going to reopen your facilities and you've told your employees that they can return to the office, come back to work, and you have an employee who says, I want to stay working from home for whatever reason. And the question is whether if you've made your office available and it's open and the employee nevertheless chooses to work from home, does the employer still have to reimburse the employee for those expenses from working from home? And in particular, under the laws of California or Illinois, I have to confess, I don't know either state's laws well enough to just be able to answer that off the top of my head. Does anybody know?
Tim, I agree. I don't know if I can definitively answer it. I think I'd want to look both of those states' laws up to make sure. My gut sense, for what it's worth, is that you still would likely. I think that from what I remember, although again I'd have to re-look at it, but I believe that it's just whether the employee incurs those expenses and whether they're business expenses. And in this case, I think they still would be. So that's what my gut is telling me, but that's without re-looking at those particular laws.
Yeah. And let me just encourage all those, everybody who's out there, if you have a question, feel free to, we can see it. If you type it in and send it, we can see it, and we'll be happy to take a look at it. Estrella.
Yes.
Meal breaks and rest breaks. Again, it's hard for me to imagine someone from working from home to, make a time entry that they're stopping work. They're going to go into a separate room, eat lunch, not look at their cell phone, not look at their computer, be completely free of any interruption for, a half hour, and then make a note of that time entry and go back to work. That just, good luck with that, right? So, what do you think? What are the DOLs? How is this going to be handled, do you think, by the DOL?
It really comes down to record keeping. Record keeping will save you. If you have a policy and the typical policy is, okay, I'm going to give you 30 minutes, make sure that you have that in writing. Make sure that the employees are documenting. Even if they take more than that, less than that, whatever time they're taking, they need to write it down. And if you just want to go with the standard of 30 minutes and that's what they took, make sure you write it down, because yes, eventually you will have problems if they don't have it in writing, if you don't have it in writing, because they could call in and later on make a complaint. Hey, I was working from home, 24/7, because of COVID. And then my employer is only paying me the 40 hours that I was supposed to, but I was working all these times. I couldn't even take a lunch break. We will interview, we will talk to people. But at the end of the day, if the employer has no records to back up what they're saying, that they took a lunch break, the burden of proof is always on the employer. So please document. That's what I can say.
Tim,
but go ahead, Steve.
Yeah, I also think this goes back to, I think, your point about training the supervisors and the managers. The folks who are approving the time cards. We so often in these cases we see time cards where employees seem to be taking lunch breaks, 12 to 12:30 every single day, or 12:30 to 1 every single day. And we know that that's just not what's going on, right? The supervisors know it, the managers know it, and they have to call that out to their employees. The best practice is to have the employees fill out a time card or track their time accurately to the minute, right? So that you don't just have a time card that says, 8.0 hours on this date with a 30-minute lunch break. You want to have the employees report that they clocked out at, 11:55 for lunch break, and then they came back at, 12:38. That's really the best practice. I also think this is not just an issue for employees working from home. what I've been thinking about as employees return to the office is, employers who are closing their cafeterias, who are closing down their break rooms, workers who are going to be maybe scared to go down to the restaurant across the street to eat. And so you're going to have a situation where many employees are now going to be eating their lunch at their workstation instead of going out to eat with their coworkers or going to the break room. And I think that is an area where you may see a lot of interrupted meal breaks, right? So if the employees are working at their desks, working at their workstations, continuing to do work, answering phone calls, checking emails, that time is going to be compensable. And I think employers need to have a plan to deal with that as well.
Yeah, I mean, go ahead, Australia. Go ahead.
Yes, absolutely. You bring up an excellent point. Even when you're not in COVID, back in the day, we had that problem a lot primarily in doctor's offices, front desk receptionists, that kind of employment, or even restaurants, right? They will get called after being on break for 15 minutes and they had to take a lunch break. So please be aware that employers, that if an employee is taking a break and they get interrupted, if it's less than 20 minutes, the employer has to pay them. That's it. And we would go through the timesheets. I would look at a case and I would see, 19 minutes here, 18 minutes here, and they got deducted. So now all that money has to go back to the employee. All the time is now compensable. So yes, employers, stay on top of it. If they get interrupted, have policies so they can self-ID themselves and they can get paid for that time. Anything under 20 minutes must be compensated. I know that there's some, software that can trigger that specific issue when an employee has less than 20-minute break. Make sure you talk to your IT staff. That could be something that you can help.
Great. Thanks, Australia. All right, moving along. John, you're going to talk a little bit about exempt employees working from home. Let's start off by talking about what about furloughs and how can furloughs affect the salary basis test for exempt employees?
Absolutely. Thanks, Tim. And I'll go through this briefly because I think it probably doesn't come up all that often. But generally speaking, this you can have an issue with the salary basis test. The salary basis test generally just saying that you have to pay people on a salary basis every week, which means that they're guaranteed a set amount of money regardless of how many hours they work during that week. And there's DOL regs and then case law that precludes an employer from moving that set amount of money, up and down, primarily down, in a way to get around what the salary basis test is. In other words, employers can't set it up in such a way that if the employee works less hours, they'll end up making less money. And this has kind of come up in the furlough context, where if you have a company that didn't want to necessarily just furlough everybody right off the bat, maybe we think it's better to reduce everybody's wages for a little bit of time, and with the expectation that they would work a corresponding, less amount of work during that week. A lot of this is coming from good intentions, but the FLSA is written in such a way that it doesn't really look at that very often. And so, as a general,
can I just ask a real quick question, John?
Yeah,
so,
absolutely.
Just generally speaking, at least under federal law, is it not, appropriate or legal if you have someone who's on a salary, but you're going to reduce that person's amount of work because of the pandemic or whatever? So, is it lawful going forward to reduce someone's salary by a proportionate amount?
It is if it's done correctly. And generally, all that it takes is that new salary needs to be a long-term salary that doesn't vary based on hours work. And then, of course, it still has to meet the minimum threshold for the salary level test. But what you're really looking at is it being a long-term salary change that it's not going to change week to week. You can certainly set it, and then a month or two later, things have gotten better. Maybe it goes back up, or maybe different changes have to be made. But you want to set it up in such a way that you're not changing it week to week. That's when you'll really get into trouble with the salary basis test and potentially have an issue where the employee becomes non-exempt because that part of the test fails.
Okay. So what are some other issues that come up in the context of a salaried exempt employee who's working from home, or some of the issues that have come up? You've got examples here of skeleton crews and all hands on deck. What are you talking about there?
Tim, I think I can handle that. We expect potential misclassification issues to arise when a company's hourly workforce is reduced significantly, and then salaried exempt employees are asked to pick up hourly or non-exempt job duties, right? So when you've had thousands of your hourly workforce furloughed, a lot of the exempt employees had to pick up that work, including, when as businesses reopen. And to be exempt, we know that the employee's primary duty, which under the FLSA is the main or the principal duty, the most important duty, must involve the performance of exempt work. And as a general rule, if an exempt employee is performing a lot of non-exempt work for a prolonged basis, right, typically spending 50% or more of their time on non-exempt tasks, that will likely jeopardize the overtime exception or exemption. Now, there's an exception to this general rule if the exempt employee is required to perform non-exempt work because of an emergency, right? So think about exempt employees who are doing cleanup work after a hurricane or after a flood or other kind of work to ensure continuity of operations. But it's not entirely clear that this emergency exception under the FLSA will apply in the context of the pandemic. So if a company is requiring its exempt employees to take on too much exempt work, you could be putting their overtime exemption into jeopardy. So the better approach is to try to maybe spread out the work or allow some part-time non-exempt employees to return. So, for example, think about an accounting department or a finance department, and you furloughed all of the lower level hourly folks in that department, and the managers in the department now are having to do all the work. Or an HR department, and you furloughed all of the generalists, and the HR directors are having to do all the work. There's, you can look at that in the safety department or engineering department. That could come up in many different contexts.
And so, if that does happen, what is that? I guess the question is that okay for someone who's someone who's exempt to assume a significant number of non-exempt duties? Is that, generally speaking, is that going to create a problem for the salary basis test?
Yeah, it's going to certainly create a problem for the duties test, right? Because their primary duty may no longer be
the duties test, right?
Yeah, doing exempt work. Now, under the FLSA, there's no strict sort of quantitative line, right? The 50% is sort of a general guide, but under the FLSA, it's a little bit more, the test is a little bit more wishy-washy, right? So you don't just look at the time, you look at, whether the tasks how important they are to that particular role, how necessary they are. But under some state laws, California, for example, there is a strict time cutoff, so that, under California, for example, if an exempt employee is spending more than 50% of their time on non-exempt tasks, they will lose that exemption. That's not necessarily the case under federal law, but it could be the case under federal law as well.
Okay.
Just before we move on to the next slide,
yeah.
I want to provide everyone seeking CLE credit with the code for today's webinar. So the code is SS, as in Seyfarth Shaw, SS3232. One more time, that's SS3232. And all attendees will receive an email with instructions on how to receive the CLE credit for today.
Great. Thank you, Roya, for the code. We all have to have a code. Australia, you are now the star of the show. We want to hear about what is going on at the DOL, and whether they're recognizing, hazard pay, whether they're going to be focusing on that, and whether if that's going to affect the regular rate. What can you tell us about that?
I can absolutely see that as an issue in the future, something that they want to look into. So yes, be very careful, employers, when you're talking hazardous pay, any kind of incentive pay, be careful with when you do it. It's great. This is one of the conversations that I hated to have with the employer sometimes, because I would see on the books a bonus, extra money because they did great, they performed well, hazardous pay. All that money has to be included in the regular rate. The calculation for that is not complicated. Essentially, we're talking about if you give extra pay to your employee, in this case, hazardous pay because of what's going on right now, make sure you include it in the regular rate. If you have an hourly employee and you're paying them $10 the hour, and now you're giving them an additional $2 the hour because of hazardous pay, let's say they work 41 hours. Well, now you have to make sure that 1 hour, you're also making the payment of overtime for that hazardous pay, because that hazardous pay has to be included in the regular rate. So yes, like I said, this is one of the not very good conversations that I would have with employers. The last thing we want to do when we are investigating a company, back in the day, is to get the employees to receive less money because of this additional math that they had to do. So just be aware that this is out there, and if you are doing this, make sure you understand the regular pay. One is to be included. Let's see what else here.
While you're looking at that, Australia, let me just jump back real quickly. We have someone has asked a question about moving someone from a non-exempt, or I'm sorry, from an exempt to a non-exempt role. And so the question is whether someone can be moved in, from an exempt to a non-exempt role. That's certainly one solution to the question of what to do with an exempt employee who is being asked to do non-exempt work. Usually the question is, how long can someone do that before they lose their exempt status? But if you're in a position where you can transition that person to an hourly non-exempt role, then I think that's great, because you then, you're eliminating the risk. You're making that person, hourly non-exempt, and you're paying that person overtime. So if you have the benefit of being able to do that, then yes, that's definitely advisable and a good way to handle it.
I think the risk there,
but
Tim,
most companies, I think, have a hard time switching back and forth. I'm sorry. Go ahead, Steve.
Yeah, I think that there's sort of practical obstacles and some legal risk in doing that, and that's why probably not a lot of employers are transitioning exempt employees to non-exempt roles. I mean, number one, a lot of your exempt employees are higher paid, highly paid, and so they may not really like being transferred to an exempt role where they may get a pay cut, a significant pay cut. But even if you don't do that, most exempt employees are not accustomed to keeping track of their hours, and they might play fast and loose with their time cards. And so, by transitioning them to an exempt role, you might be inviting some off-the-clock claims. But, that's not necessarily a reason not to do it. It's just you have to go in there with eyes wide open.
Yeah, that's a real – oh, go ahead, Australia, yes.
Yes, if I may, you bring some really good points. You have to be careful. That's correct. You have to look at your state law as well. But when it comes to the FLSA and the audience, just know that those options are there. The FLSA does not say to not convert those salary to hourly. It's your right to do so as long as you do it right. So if you are in that predicament where you need to save some money and you want to save some headaches, you can absolutely do that. Just make sure you talk to your consul, labor attorney for sure, because you can definitely do that. There's nothing wrong with doing that as long as you do it the right way.
Yeah. And I'm sorry, Australia, we sort of interrupted you. You were talking about hazard pay, and then, well, I think, John, you were going to talk about, we were going to move to incentive plans and commission plans, and I guess a lot of folks out there nowadays have got, incentive plans, commission plans, and because of the pandemic, they're having to change those plans. And so you're going to talk about the risks and the issues to consider if you have to make a change to those plans.
Absolutely, yeah, and I'll move quickly because I think we're getting low on time. But generally speaking, this is for an incentive plan or a commission plan. It's less a FLSA issue and more of a state law / contract issue. Generally speaking, unless the commission plan or incentive plan has some sort of contractual obligation in an employment letter or an employment contract that can't be changed, you can generally change those moving forward. The issue comes up when you change them looking backwards. There's quite a, Texas, for example, you have to pay out commissions, bonuses, their wages as long as they're earned according to what the plan said. So you can get yourself into issues if you change one looking backwards when the employee has already met the qualifications for earning those wages or commissions or bonuses, whatever the plan provides for. So it takes a careful look at the language of the plan, and then then I guess there's also some sense of fairness and trying to manage your expectations of your workforce from a practical standpoint.
Well, I guess it sounds like the biggest takeaway is it's okay to change the plan prospectively, but be careful and extra careful if you try to make a retroactive change to the plan. You can really step into some real problems with that.
Yeah, I think that's generally correct. The prospective changes you could potentially not be able to either if it's a contractual contract that you can't change unless until that contract ends or something along those lines. But most people are at will, and most plans can be changed moving forward.
Yeah, thanks. Steve, real quick, do you want to talk about independent contractors and a couple of the recent developments from rulings at the Department of Labor?
Yeah, sure. I'm not sure the landscape has changed much with respect to independent contractors. There hasn't really been a lot of developments other than what we saw last year in California and with the DOL, which are essentially moving in opposite directions, right? The federal government is making it easier for employers to classify workers as independent contractors and sort of reducing the potential risk there. But you have states like California, Pennsylvania, New Jersey, others that are going in the opposite direction, making it more difficult to classify workers as independent contractors. What I'm looking at right now is the potential fallout from the CARES Act, which, as we probably all know, surprisingly allowed independent contractors, self-employed workers to file for and receive unemployment benefits. And it's still kind of up in the air if all of those unemployment claims are going to lead to potential misclassification audits by state unemployment agencies, which are not uncommon. I've handled numerous audits, and from state agencies. They typically start when an independent contractor files for unemployment after their particular project ends or their assignment is terminated. So that's something that we might see in the future. With respect to other developments, that earlier this year, the Department of Labor issued a new rule concerning the fluctuating workweek method, and I don't want to spend too much time or get into the weeds in that. That's for another day, or we can answer specific questions if somebody has them. But the bottom line is, if folks were hesitant to adopt the fluctuating workweek method for overtime before, the recent changes may prompt you to take another look. Previously, the Department of Labor has said if you can't use the fluctuating workweek method if you pay any amount of money on top of the employee's fixed salary. So, for example, bonuses or commissions, right? Shift, additional hazard pay or shift bonuses. But now they've backtracked on that, and they essentially said if you pay additional compensation on top of the fixed salary, that doesn't invalidate the fluctuating workweek method. Another, they made a number of clarifications, but one of the ones that I think is helpful is that they've clarified, some courts in the past have held that the fluctuating workweek method is only available if the worker's hours fluctuate above and below 40 hours. But the final rule essentially has clarified that that's not necessary, that you can use the fluctuating workweek method even when the hours fluctuate above 40 only. So I think that's helpful. There's a number of other clarifications, but we don't see a lot of employers use the fluctuating workweek method because it's burdensome to implement, it's burdensome to keep track of, a lot of risks and traps. And there's many states, California, Alaska, New Mexico, Pennsylvania, others where you can't use it. But to the extent if somebody on the line was interested in the fluctuating workweek method, we should definitely check out the new rules and the clarifications. And I think John might address the 7I changes.
Yeah, and I think it's kind of the same
John.
takeaway there too. Yeah, thanks, Tim. It's kind of the same takeaway there too, in that it's something that if you think it might apply to you, you'll probably want to look into it a little bit more. But quick background for those that don't know, the Section 7I exemption is a exemption from the overtime requirements of the FLSA for certain commissioned employees that work in a retail or service establishment. And what the retail and service establishment is not entirely clear, as you could imagine under the FLSA, like so many other things. The DOL had for years, going all the way back to the 1960s, had a couple of different regs that provided examples of what is and what is not a retail establishment. For example, banks, barbershops, beauty salons, dentist office, things like that were presumed to have no retail concept, whereas department stores, hotels, restaurants, sporting goods stores, etc., were deemed to potentially be retail establishments. And what this new reg does is it basically gets rid of both of those lists, the list of things that are and are not retail establishments, and then it leaves it up to the business to show that it is a retail establishment under the FLSA and under the DOL regs. So it opens the door for more businesses potentially using this exemption, but to the extent that a business wants to use it, I think there needs to be a deeper look into whether they'll actually fit the bill for the exemption.
Okay, great. Are we out of time?
No, Tim, I said, why don't we just cover the last part? And, folks, if
okay,
I don't see too many questions.
We were cutting off at 1:45. Sure. Well, let's go to Australia then. Australia, can you talk about, I guess, best practices and strategies for what employers should do if they do get a call from the DOL and the DOL wants to come in and do an audit or an investigation of their wage and hour practices? Tell us what should we do?
Absolutely. I will keep this very short. I know we're running out of time. Yes. So the first one I would say, it's going to sound weird, but be kind, be nice. It really goes a long way. Can you guys see me? Yes. So yes, be kind. It really goes a long way when you're talking to that investigator, and they just, it will go. They have a lot of independence in how they handle the investigation, and so that would carry a lot of weight. The other takeaway that I would say for investigations, anything that they ask you, there's always going to be that first initial meeting with the investigator. I would highly advise that you guys have your labor law attorney or labor law consultant. There were so many times that I would deal with their internal general counsel, and you have to have a labor law attorney, a labor law consultant, somebody who has dealt with those investigations. Also, on that initial conference that you have with that investigator, because first they send you the letter, or they can show up unannounced, which they can. Don't be alone in that meeting. If you can hold a meeting for the next day, if they show up, and you can retain a counsel, that would be the best. See, yes, paperwork. I said it earlier. Paperwork is your best friend when it comes to record keeping, when it comes to how you cap the notes on the employees. That goes a long way. Let's see. The burden of proof is always on the employer. So the investigator, not that they will believe the employees, but you have to disprove anything that they say. So again, paperwork. All right. And
Australia, I have a question. Oftentimes when the DOL comes knocking, the first thing you get is a letter with 5 to 10 very broad requests for documents and information. And in my experience, I've typically been successful in trying to negotiate the scope of those requests down. Is that your experience as well? And does the Department of Labor, do they intentionally send out over broad requests? And how often did you get employers giving you everything that you wanted? And how often did you negotiate with the employers?
Great question. Yes. So an investigator will actually have the ability to do a limited investigation or a full investigation. It just really depends on the actual initiative as well. The Department of Labor has two ways of starting an investigation. Either they do direct or they do complaint driven. So it really depends what type of investigation we have at hand. And also it really depends the investigator that you have. Because if they are a seasoned investigator, it is very possible, very likely that you have a seasoned investigator and you have a limited investigation, that the investigator will not ask everything for the last years, because that is how long that investigation will be. 2 years is for Department of Labor wage and hour. The statute is 2 years. So again, it really depends. But that's where if you have your attorney or, well, I guess, yes, they will know. They will know what you have to provide, because unfortunately, it happens that they do overextend sometimes. They do ask for things that technically they're not allowed to ask for. And so they're human beings just like you and me, so sometimes they make mistakes as well. But yeah, they will give you that letter. You have to provide everything that they're asking you and just really know your rights.
Celia, I have a question for you. If I think I've had situations where we get investigation from the Department of Labor and it's been triggered, somebody has made a complaint, but the department sometimes hasn't told us the identity of the person making the complaint. Is that common?
Yes, they should not ever, ever, ever disclose. The investigator is not supposed to disclose whether it was a directive investigation or if it was a complaint, and absolutely they cannot disclose the complaint at all. So if they have, again, they're human beings, they make mistakes, they shouldn't make those mistakes, but they're not supposed to tell you. It's just an investigation.
Yeah. A lot of the times the Department of Labor comes knocking, at one particular facility, and the employer may have numerous different facilities, in the same city or in other states. They may have, related companies, affiliated companies, subsidiaries. What's the best way, or maybe a couple of ways that, an employer can either work with the investigator or convince the investigator to, keep the focus of the investigation narrowed to, one particular facility or one particular group of employees?
All right. So I need to be careful with this answer. Okay. So technically, if the investigator is asking you for everything, all the branches, all the LLCs that you have, everything, you need to provide that information, right? Now, does that happen? No. It all depends what kind of investigator you have with you, right? A very seasoned investigator, they might know you, they might have already researched you, researched your companies. Everything is in Google nowadays. So if they have maybe a complaint, right, and they're saying that it's company-wide, we have a problem, then that investigator will ask you for everything. So I guess my advice here is comply with their request, but if they don't ask you for something, do not share that until they ask you.
Thank you, Estrella. And that seems, that matches with my experience as well, because the scope of the investigations that I've been a part of have tended to differ depending on the investigator that's doing them. And so I agree that there seems to not be one size fits all. I'm wondering if there's any tips or advice you might be able to share with us about how the Department of Labor approaches the calculation of damages in the investigations, right? In my experience, they typically don't go back 3 years. Sometimes there's some negotiation about whether willfulness is at issue, or whether double damages are going to be required. Maybe you can give us some pointers on that.
Yes. So when it comes to liquidated damages, it's been my experience that if you have done everything you can possibly done, have a policy, have a very well documented that it wasn't supposed to be this way. You had a bad manager who created this issue, but you had policies in place and they were just not followed, but you did your best. The Department of Labor can, well, again, this is from me coming, I guess, to you guys, but they will look at that information and they will see that you were trying to be in compliance all along. And that will carry a lot of weight when it comes to the liquidated damages. And so, was that the question? So yes,
yeah.
it will carry a lot of weight, doing the right thing, trying to do the right thing.
last question, because I know we're running out of time, unless Tim has a question. If I'm an employer and I'm dealing with an investigator, and I don't think that the investigator is either understanding my documents or asking for too much, or I have a disagreement about whether we're complying with the law, how do I escalate that issue? Who do I talk to? Is there somebody that I can connect with, going sort of above your head?
Yes, yes. So if you've gotten to that level, like I said at the very beginning, be nice, right? If you've gotten to that level and you know that you're correct because you have the writing on the wall and you know that this is right and you're just not getting through with this individual because they're human beings, you can always escalate. Remember, DOL, Department of Labor, they're service employees, right? They're there to serve the public. So if they're doing an investigation on you and you know that you're correct or that he or she's not getting your point, you can absolutely escalate. They have a supervisor, just like most of us do. And in that area would be the investigator, and then the assistant director, and then the director. So yes, you can always escalate, but remember, be nice.
Well, thank you very much, Australia, for joining us. Is that now? Are we out of time now?
I think that's an hour, Tim, and I don't see a lot of questions unless I'm missing something.
That's because I've answered them all when you were talking. Well, again, thanks, everybody. Thank you, Steve. Thank you, John. Thank you so much, Australia, for joining us here. And if anybody has any questions, they can always send us an email.
Thank you.
Thanks, Tim. Thanks, everybody. Have a great day.
Thanks, everyone.